Here's a detailed summary of Amazon's Q2 2025 earnings call, focusing on key financial metrics, forecasts, risks, and executive statements. Overall performance and financial highlights. Amazon reported strong Q2 2025 results, with revenue reaching $167.7 billion, a 12% increase year-over-year excluding foreign exchange impacts. Operating income saw a significant jump of 31% year-over-year to $19.2 billion. Trailing 12-month free cash flow was $18.2 billion. Key financial metrics and segment performance. Revenue. Worldwide revenue. $167.7 billion, up 12% YOY excluding FX. North America revenue. $100.1 billion, up 11% YOY. International revenue. $36.8 billion, up 11% YOY excluding FX. Operating income. Worldwide operating income. $19.2 billion, up 31% YOY. North America operating income. $7.5 billion, up $2.5 billion YOY. International operating income. $1.5 billion, up $1.2 billion YOY. Operating margin. North America operating margin. 7.5%, up 190 BPS YOY. International operating margin. 4.1%, up 320 BPS YOY. AWS. Revenue. $30.9 billion, up 17.5% YOY, representing an annualized revenue run rate of over $123 billion. Operating income. $10.2 billion. Operating margins. Declined from 39.5% in Q1 to 32.9% in Q2, primarily due to seasonal stock-based compensation, higher depreciation, and foreign exchange impacts. Advertising. Revenue. $15.7 billion, up 22% YOY, driven by sponsored products and strong store traffic. Third-party seller mix. Worldwide paid units grew 12% YOY. Third-party seller unit mix reached a record 62%, up 100 BPS YOY. Management's forecasts for Q3 2025. Net sales. Expected to be between $174 billion and $179.5 billion. Operating income. Expected to be between $15.5 billion and $20.5 billion. The guidance accounts for Q2 results, current quarter trends, and macroeconomic expectations, including tariffs. Key themes and initiatives. Customer focus. Inputs and outputs. Management emphasized a focus on fundamental inputs like selection, low prices, and speed of delivery, which drive key outputs like revenue and operating margin. Delivery speed improvements. Significant progress has been made in re-architecting the inbound network, increasing direct lanes, reducing package travel distance, and consolidating orders. This has led to record delivery speeds for Prime members, with plans to expand same-day and next-day delivery to over 4,000 smaller U.S. cities and towns. Prime Day success. The recent Prime Day was the biggest ever, with record sales, items sold, and Prime signups. Independent sellers also saw their best performance. Automation and robotics. The company deployed its 1 millionth robot and is leveraging AI Deep Fleet to improve robot efficiency. These advancements contribute to cost efficiencies and better customer experiences. Generative AI, Gen AI AWS. AWS is experiencing significant demand for Gen AI services, with more demand than current supply. Key developments include the Trainium 2 chip, Amazon EC2 instances powered by NVIDIA Grace Blackwell superchips, and advancements in Amazon Bedrock with new models like Claude 4 and Amazon Nova. The release of Strands and Agent Core aims to simplify agent building and deployment. AWS Transform for mainframe modernization and Kiro, a new coding agent, were also highlighted. Internal adoption. Amazon is embracing Gen AI internally to improve coding, analytics, research, and business process automation, aiming to increase speed to market and make teammate jobs more enjoyable. Project Kuiper. The company has completed its third successful launch and has secured enterprise and government agreements for its satellite internet service. Commercial data launch is expected later this year or early next year. Alexa Plus. The next-generation assistant is seeing positive early access feedback, with millions of customers now having access. It's noted for its increased intelligence, action-taking capabilities, and potential for driving shopping, advertising, and subscription revenue. Amazon Pharmacy continues to show strong growth, up 50% year-to-date. International segment improvement. Strong revenue growth and margin expansion in the international segment were driven by established countries, mirroring U.S. margin profiles and productivity gains, as well as improvements in emerging markets. Significant risk factors. Tariffs and macroeconomic uncertainty. The ongoing uncertainty regarding tariffs, particularly from China, and their potential impact on retail prices and consumer demand remains a key concern. Management acknowledged they don't know who will absorb future cost increases. AWS capacity constraints. Demand for AWS services, especially in Gen AI, currently outstrips supply. While capacity is expected to improve quarterly, it will take several quarters to fully resolve, with power being a primary constraint, alongside chip and component availability. Competitive landscape. AWS. While AWS maintains market leadership, competitors are also growing rapidly. Management emphasized their focus on customer experience, operational performance, security, and a broader functionality stack as key differentiators. Dependency on custom silicon and supply chains. The reliance on custom chips and broader supply chain dynamics for both AWS and fulfillment operations presents ongoing risks. Foreign exchange fluctuations. While Q2 saw a favorable impact, currency volatility can affect results. Most important statements from executives. Andy Jassy, CEO. Today, we're reporting $167.7 billion in revenue, up 12% year-over-year, excluding the impact from foreign exchange rates. Operating income was $19.2 billion, up 31% year-over-year. On tariffs. We just don't know what's going to happen moving forward. It's hard to know where the tariffs are going to settle. What we can tell you is what we've seen so far in the first half of the year. In the first half, we just haven't seen diminished demand. And we haven't seen any kind of broad-scale ASP increases. On AWS and Gen AI. AWS continues to build a large, fast-growing, triple-digit year-over-year percentage multi-billion-dollar business with more demand than we have supplied for at the moment. He also stressed AWS' differentiated offering across the AI stack and the importance of custom silicon like Trainium 2 for price performance. On Alexa Plus. Alexa Plus can take a lot of action for you, which is very compelling. Customers really like the experience. They recognize how much better it is than what it was before. He also highlighted its potential to drive revenue through shopping, advertising, and subscriptions. On Gen AI's impact on work. AI is the biggest technology transformation for a lifetime. It's going to not only change every customer experience that we know and enable customer experiences we really only dreamed about before, but it's also going to change very substantially the way we work. Brian Olsavsky, CFO. Worldwide revenue was $167.7 billion, a 12% increase year-over-year, excluding the impact of foreign exchange. Worldwide operating income was $19.2 billion, which was $1.7 billion above the high end of our guidance range. On AWS margins. We did see AWS segment margins decline from a record high of 39.5% in Q1 to 32.9% in Q2. The largest quarter-over-quarter driver of the decrease, about half, was due to the seasonal step-up in stock-based compensation expenses. On Q3 guidance, Q3 net sales are expected to be between $174 billion and $179.5 billion. We estimate the year-over-year impact of changes in foreign exchange rates to be a favorable impact of approximately 130 basis points. On international segment, so a very strong quarter for the international segment, both on revenue growth and also on operating margin. Operating margin was up 320 basis points year-over-year to 4.1%. On AWS capacity, I don't believe that we will have fully resolved the amount of capacity we need for the amount of demand that we have in a couple of quarters. I think it will take several quarters, but I do expect that it's going to get better each quarter. Lowlights: AWS margin decline. The significant drop in AWS operating margins from Q1 to Q2, although explained by specific factors, is a point of attention. AWS capacity constraints. The ongoing imbalance between demand and supply for AWS services, particularly in GenAI, limits immediate revenue potential and requires significant ongoing capital investment. Tariff uncertainty. The unpredictable nature of tariffs and their potential to disrupt demand and pricing remains an unresolved risk. In summary, Amazon delivered a robust Q2 2025, driven by broad strength across its e-commerce, advertising, and AWS segments. While facing capacity constraints in AWS and macroeconomic uncertainties, like tariffs, the company is focused on foundational customer inputs, technological innovation, and expanding its service offerings, particularly in the burgeoning GenAI space.